My name is Simon Klein. Thanks for that introduction, Renee. And we're going to discuss how to become a successful trader with any size account. Again, a stress on any size account. And that's very important for people starting out their journey in trading. Everyone asks, what size account do I need? So we're going to discuss that during this presentation. At the end, you'll know what size account you need. Quick disclaimer before we begin, just bear in mind all comments made by myself are for educational purposes only. You all know there's a high degree of risk involved in all types of trading, and we're not responsible for your trading and investment results. So again, very important, just focus, turn off all distractions, make sure you get the most out of this presentation, and at the end of it, if you have any questions, I'll have a questions and answers session. So Renee's already gone over about myself, but just to tell you that TRADESMART is a trading education business. We focus primarily on teaching you how to read the market professionally and how to run a successful trading business, including how to develop your own trading plan and strategies which fit your personality and lifestyle. It's very important to trade your own trading plan, your own strategy. You can learn from other people, but you have to make it your own in order to succeed. That's what we're going to cover. Goals, defining your edge. Now, very important, the trading framework you need to have in place. If you don't have this framework in place, you will not succeed. The process you need to go through step by step as a trader, day by day, week by week, month by month, year by year. And then we're going to be discussing, once we've set the groundwork, about account sizes. And then we'll open up for audience questions and answers. Trading is a business, so treat it as a business. Hobbies cost money, businesses make money. So I want each one of you watching this now to ask yourselves, why do you want to trade? You can type it in the chat area. Let me just see if I can pull this out. Just type in the chat area, why do you want to trade? Why is it so important to have goals? Again, we need to ask ourselves these questions. Why am I trading? You know, most people are going to say to make money, to make income. Again, that's not a good enough reason. There's many things you can do to make money, but why particularly trading? Okay, thank you, Daniel. Okay, so everyone type into the chat area. Okay, Daniel's typing money, money, money. Again, that's not a good enough reason. Mobility, that's a good reason, James. Dennis, that's a great one. To make enough money so I can quit my day job. Yeah, that's good. Increase retirement funds, Tom, that's a great reason. So one thing I learned very recently is you can go, I think it was developed by someone called Dan Sullivan. You can ask yourself 7 questions. Ask yourself, why do you want to trade? And if you give an answer to make more money, ask yourself, every time, ask yourself another question with the answer to the question that you just answered. So it would go something like this. Why do you want to trade? To make more money. Why do you want to make more money? Because I want freedom. Why do you want freedom? So I can do what I want. And go 7 times until you really get into the depth of really why you want to do what you're doing. Why do you want to trade? Why is that so important? Because it gives you a big picture reason for what you're doing. Now the question is, do you really know why you want to trade? And as we said before, to make money is not a good enough reason. You need to have a deeper reason, something that's going to keep you going when the going gets tough. So why are trading goals so important? Or having goals with anything? Again, it's if you're in a car and you're driving very fast, but you don't know where you're going, you're not going to get anywhere. But if you drive slow and with purpose and know exactly where you're going, then you'll probably get there. So it's important to have goals, because if you don't know where you're going, how on earth are you going to arrive at that destination? Trading goals are important because they give you focus and direction. And another very important thing on the journey to become a successful trader, it's not an easy journey. For those of you who are on the journey already, you already know that. For those of you who are starting out, trading is not going to be what you think it is. Trading is more of a discovery of self and a mastery of self more than anything else. But the reason why you need to have goals and break them up into smaller goals is that they're going to give you satisfaction when you achieve them. You may not be a consistently profitable trader at this time, but if you're moving along the journey and that is getting you closer to the goal, the end goal, which is a consistently profitable trader. So if you know where you are on that journey and you know that you've reached a few milestones and you have, say you've got 10 milestones and you're at number 6, so you know you're progressing on the journey, that's going to give you satisfaction, even though your P&L may not be positive yet, but you're progressing on that journey slowly and steadily and surely. That's going to give you a positive trading experience. A lot of people will drop out of trading because it gets very frustrating for them. They're not getting what they want out of it. And they just drop out. They lose too much money, or they don't realize that you really should start with a smaller account. Again, we'll go into that when we talk about account size and how much money you need. But you want to make sure that you're enjoying what you're doing. So if you set yourself goals and smaller goals, milestones, and you achieve them, and you know the milestones that you need to go through, the journey that you need to go through in order to succeed as a trader, then that's going to give you a sense of satisfaction going along that journey. And sometimes the journey is more important than actually what you get to at the end. How you get there is important, and it's a really wonderful journey to become a master trader, to go through and discover yourself and become the best you that you can be. So there's a lot of things that happen when you do that. You become better in probably all other areas of your life as well. So there's a lot of things that come from working on yourself to become a successful trader. So what are your trading goals? Yeah, everyone should write down, if you don't have them written down already, what your trading goals are. For example, your trading goal, one of your goals could be to acquire expertise in reading the market. I believe that the first thing that you should do to become a successful trader is learn how to read the charts, no matter how you're trading. Learn how to read the candlesticks. Plain price action. No indicators. You don't need indicators. It's important that you set challenging and feasible goals. Don't then set them too high that you can't reach them right now. Set them challenging so you have to work hard, but also set them according to your level of mastery where you are at the moment. So sometimes if you can't do that yourself, you need to maybe speak to a trading coach, someone who has experience at guiding people along this journey, someone who'd be able to tell you exactly where you are in the journey and what steps you need to take in order to get to the end goal of becoming a consistently profitable trader. And also along that journey, if you end up veering off into some other direction that you shouldn't be going in, and you're now pointing in the wrong direction, a good trading coach should be able to recognize that and help you get back on track. Sometimes, a little deviation now, if you look at, a straight line and a slight deviation, it doesn't really show too much distance between where you want to go to where you are now, close to where you start deviating. But as you get further and further away, the distance increases. So it's very important to not build bad habits in order to, to keep on track to get there as quickly as possible. You should set realistic goals that lead to a sense of accomplishment and progress. So let me ask you guys, do you have trading goals, and do you have them written down? Are they clear? Do you know why you're doing what you're doing? And do you know what you need to do to get to the next stage? Do you know the journey that you need to go through, those milestones that you need to achieve? If you don't, it may be a good idea to stop trading if you're not getting the results you want right now. Step back and start thinking about why you're doing what you're doing. and why do you want to do it, and how are you going to get to achieve those goals? So one of the important things that you need to ask yourself is commitment. How committed are you to succeed as a trader? What would it mean to you if you cast yourself forward a year or two and see yourself as a consistently profitable trader? Are you committed to get to that goal? Ask yourself, how committed are you? When it gets tough, are you going to quit and say, it's the market's rigged, the specialist is out to get me, they know where my stops are, the broker's going to get, whatever it is, blame it on everyone else? Or are you going to take responsibility yourself and do what you need to do to succeed? So will you invest in an education and training? Again, it's very difficult to do it by yourself. Will you work on yourself? Will you learn from your mistakes and failures? Do you have a methodology so that you know what you're doing right and what you're doing wrong and what you need to work on? And we're going to be covering that shortly as well. I'm going to give you most of the framework you need to have, and that process, that step-by-step process you need to go through almost daily in order to succeed, in order to track everything that you're doing. So you're going to learn from those things. Will you do whatever it takes? Now, from my experience coaching traders, coaching people to become successful traders over the years, I found one of the main things in the commitment is that when you talk to people asked me in my development as a trader, what is your plan B? What are you going to do if it doesn't work? Well, I turned around to them and said, I don't have a plan B. It's plan A. I'm going to make it work. I'm going to do whatever it takes. So if I see some of my most successful traders that I've trained, and more recently, there's one spectacular trader who's achieving really good results, their attitude is exactly the same. Plan A, no plan B. Make it work, do whatever it takes. So now we've talked about goals and our commitment to achieving those goals. What else do you need now in order to become a trader? Well, very important, you need to define your edge. How are you going to approach the market? So let me ask you, what is an edge? And more importantly, what is your edge? Do you know what your edge? Every one of you here who's trading, I'm sure everyone watching this presentation, either on the recording or live now, do you have an edge? So let me type in the room what your edge is. If you have one, very quickly, what is your edge? Do you know how to read the trend? Are you buying pullbacks in the trend? Do you know where supply and demand is in the market, for example? Are you buying and demand, selling and supply? Do you know how to recognize that? What is your edge? Are you trading using indicators and that's your edge? Green light buy, red light sell, and not really understanding much about what's going on behind the scenes? Or you're a price action trader with your finger on the pulse of the market. You know exactly what's happening. You know how to read what's happening as it's happening, and you know what the odds are. So again, what is an edge? An edge is an advantage you have over others. What exactly is a technical edge in the market? Again, you need to ask yourself these questions. If you're trading and you don't have an edge, well, that's very dangerous. Technical edge is recognizing when the odds in the market are in your favor. Yeah. So that if you take this trade 100 times, you may be right 50 out of 100 times. So you know that the odds of this working are 50%, but when they work, you make 2 times what you would when they don't work. That edge gives you what you call a positive expectancy. That means you will make money over time. You're going to be wrong half the time and right half the time. But when you're right, you make double you do when you're wrong. Mathematically speaking, you will make money over time. So all you need to do is follow that edge and trade it every time and not get too distraught when you have a losing trade, because you know ahead of time that 50% of those trades are going to be losing trades. Every time you see your edge play out in the market, you could have a strategy that has a 70% likelihood of giving you a winning trade. So 7 out of 10 trades, most often than not, are going to work. You just don't know how that distribution is going to be. You may have 3 losing trades at the beginning and then 7 winning trades at the end. Or you may have winner, 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 loser, winner, loser, winner, and carry on like that. You've got no idea on the distribution of those trades. So imagine that you start a strategy and you start with 3 losing trades. How do you feel? If you're not sufficiently knowledgeable about your strategy to know that it has a positive expectancy, you may just throw your hands up in the air and say, hey, this doesn't work. Let's go and find the next strategy. Because knowing that not every trade is going to be a winning trade is very important, so that you can trade with the correct mental framework. So another very important question to ask is, who is on the other side of your trade? If you don't know who is on the other side of your trade, you may be the novice trader. You really want a novice trader on the other side of your trade. For example, if you buy, you recognize an uptrend and the market's pulling back to a demand area, and you buy, someone just sold to you, and more often than not, the market's going to move to the upside from there. It's a pullback in an uptrend to demand. That's your edge, for example. So you buy the pullback, someone else is selling thinking it's going down, and you buy and it starts to move in the upside. So someone who sold to you is maybe the novice trader, and you're the professional trader who is buying with an edge. So ask yourself the question, do you know what your edge is? And here's something very important now. And I want you all to write it down. You can send me an email if you want with your edge, if you want to share it. And if you've got proof that it works for you, even better. Again, you should have that before you start trading it. Here's a very important thing. If you cannot clearly explain what your edge is, you do not have one. If you can't explain it to a 10-year-old, then it's too complex and maybe you don't have an edge. And here's the very most important thing of this whole thing. And if you take this away, if you're currently frustrated with your trading, not getting the results you want, don't know what to do, then this may be the answer to your question. You may not have an edge, an answer to your problem. And here's the most important thing that you should do if you don't have an edge. If you don't have an edge, do not trade. Stop trading immediately. You're not going to make money consistently if you don't have an edge. And if you haven't got a proven edge that you've proven gives you a positive expectancy, that means you will make money statistically over a large enough number of trades, then you shouldn't be trading. Once you realize, as I said before, that not every trade is going to be a winner, and you know exactly what percentage of your trades are going to be winners compared to losers, then you're okay taking a losing trade. And that deals a lot with the psychological part of trading, where most people are trying to revive a losing trade. Trying to, they're married to their position. They're not willing to cut their loss. They want to let it run because they don't want to be wrong and they don't want to lose money. And guess what? In trading, when you're wrong, most of the time you lose money on that trade by trade basis. But you can be wrong on a trade by trade basis, but right over a large enough number of trades. And that completely changes everything. So you need to ask yourself, have you proven your edge? Does your edge have a positive expectancy? And most importantly, you could have an edge with a positive expectancy, but here's a very important question to ask yourself. Can you successfully trade your edge? You may be able to see another person doing it, saying, hey, this is a strategy I trade day in and day out, but you can't pull it off in real time. Much like you can see a tightrope walker walk from one peak to another on a tightrope, and that fits him perfectly, but you can't do that because you're scared of heights. So very important to find a style of trading that fits you and your lifestyle and your personality. So once you've got your edge, and I'm going to share with you at the end how you can learn part of my edge. But once you've got your edge, what do you do with it? Well, you need a framework in place. So first and foremost, you need a trading plan. If you don't have a trading plan, do not trade. And in the trading plan, you're going to have money management rules, risk management rules, and you're going to have your trading strategies. That's the first part of the trading framework you need to have in place in order to become a successful trader. The next thing you need is a trading log. You need to log every single trade that you do. Now, your broker's log is not enough. You need to know what strategies you were taking, what time of day you're doing it, maybe your management policies, other things that your broker's log will not have. And finally, you need to have a trading journal. You need to journal your trades. That's beyond just having a log. You need to journal yourself as a trader. You need to know why you make the actions you do in the market. So you can go afterwards and analyze what's working for you and what's not. Why did you get out of this trade? If you've got a trading journal, you can write in there why you got out of the trade early before it got to the target. And then you watch on the sidelines as it gets to your target. Now, how many times has that happened to you when you're in a trade and you're up a little bit of profit and the market starts to pull back against you and you see your profit deteriorate and go down? You see that you're watching the P&L on the screen and you say, oh, I'm going to take my profit. And then as soon as you get out, it goes down a little bit more and then it goes all the way to the target and you're not in it. You're watching on the sidelines. How frustrating is that? How many times do you do that? And if you do that, why are you doing that? And how do you fix it? So that next time when you're in that situation, you just let the trade go. Aren't we all dealing with those issues? I certainly dealt with these issues when I was developing as a trader. And it's very frustrating. First of all, in order to solve the problem, you need to know you have a problem. You need to know what's causing that problem, and then you need to know how to fix it in order to get you to the next stage in your trading. Otherwise, you're going to go round and round in circles, going nowhere, dealing with the same issues year in and year out. Don't be the trader who came to me after 10 years and I said to him, how long have you been trading? 10 years. Are you successful yet? No. What's going on? Well, they're living the same year over and over again 10 times. So they really have 1 year of experience repeated over 10 years, 10 times. Don't be that trader. So if you don't have a trading journal, which is probably one of the most important documents you'll keep as a trader, then you're going to be missing a lot of the gems, a lot of the learning experience in those losing trades and also the winning trades. So you can recognize what those winning trades are so you can take them again. And again, in my training, we go into more detail about how to do that. We can actually train our brains to recognize those patterns, and I'll go through exactly how you do that. So once you've got your edge, you've got that framework, you've written yourself a trading plan, you've got your trading log ready, and you've got your trading journal, you know what's going in there. What do you do with it? So you need routines. You need to know what you do before you trade every day. You need to know step by step what you're going to do during the trading day. What markets are you trading? When are you trading? What do you do when you finish trading? Are you prepared to trade? Always ask yourself this question before you trade. Don't just open your platform and sit down and see the market move and just jump in. Be prepared. Plan. There's two things that need to happen before you trade. You need to ask yourself, am I ready to trade? If you're ready to trade and you've gone through whatever preparation, I have a whole routine I do every morning, which involves exercising and used to be meditation as well, but I don't do that too much anymore. But generally exercising, having a good breakfast, making sure your mind's relaxed but alert. What do you do in the morning to get ready for trading, or in the afternoon, or whenever you sit down to trade? Do you just open the platform and fire off trades? And the other thing that needs to be ready is the market needs to be ready. Sometimes the market just doesn't show you anything, doesn't show you your edge. So you can't trade, even if you want to trade, if there's nothing happening in the market that's recognizing that you recognize as your edge. So if you're ready to trade and the market's not ready to trade, don't trade. But if you aren't ready to trade, but the market looks great, you also can't trade. You've got to make sure you're ready and the market's ready. And you need patience. You need to wait for the market to show you your edge. That's one of the biggest skills you need to develop as a trader, is the ability to be patient, to wait for the market to show you what you're looking for. And again, at the beginning, you have to go searching. You have to look at the market and search for your edge. And eventually, when you become more experienced, the trades find you. The other thing you need is discipline. You need the ability to follow your trading plan step by step. You need to wait for the trades, and you need to follow, once you're in a trade, you need to follow exactly what it says. If your trading plan says take the trade, put your stop in and put your target in and don't do anything, then you mustn't do anything. You leave it alone. So do you have that discipline? Ask yourself. Is that maybe one of the issues that you're dealing with at the moment? And what about psychology and emotions? Some people have a fear of making money. Some people have a fear of losing money. Some people have a fear of being wrong. And they think when they have a losing trade, it brings back everything in life when they were wrong. How do you deal with losing trades? Again, as a professional trader, you need to learn how to lose the right way. Losing as a professional trader, if you're trading correctly, losing is part of a winning system. And very important, as we said earlier, you need to be able to measure your success. You need to know what's working, what's not, and where you need to focus your attention on a week-by-week basis, on a day-by-day basis. So let me share with you now a trading process example. So you've got your trade, you know what your edge is, you've got your trading plan, you've got your framework in place, trading plan, trading log, trading journal. You know the process you need to go through. And this is an example of a process that you can go through in your trading. First, foremost, before you start trading, prepare yourself to trade. Analyze the markets you trade with a view to finding trading opportunities. Wait for the market to show you a trading opportunity in your trading plan. That's part of the, this is part of the framework. Once you find that trade, or the trade finds you, take the trade. Take a picture of the trade entry. Write an entry in your trading journal. That's the other part of the framework. So you're using now your trading journal. Manage the trade according to your trading plan with discipline. Now take a picture after the trade is completed, whether it was a winner or a loser. An important point now, take a picture of what happened next. That will enable you to see if you got out at the right price, or maybe the market went 3 or 4 times more and you could have made 3 or 4 times more profit. How do you use that next time to take it, to take more profit out of the trade? Then enter the trade in your trading log, write an entry in your trading journal, and that's it. So this is a process that you could go through on a trade-by-trade basis. With the preparing yourself to trade before, check yourself, am I ready? Is the market ready? Go through these steps. So now we're going to go on to account size. And again, for a lot of beginning traders, or for traders that have been trading for some time without success, it makes no sense to start trading with a big account. And this is kind of very sad to share this, but don't be the trader who came to me, who started out trading with $1 million account and now has $10,000 in their account a few years later and says, can you help me make back the money I lost to make my $10,000 into $1 million? That's quite an undertaking. So don't start with such a big account size when you don't know what you're doing. And again, like everything else in life, learn how to trade before you start trading. Much the same as learn how to drive a car before you start driving. Otherwise, you might crash your car or put yourself and other people in danger. Trading is no different. It's a skill. It's a profession, and you need to learn it. Just because it's so easy to open up a trading account and start trading doesn't mean that that's the right thing to do if you don't know what you're doing. It could be just as easy to buy a car and fill it with petrol, with gas, and sit in the driving seat and put the keys in. But that doesn't mean you should be driving if you don't know what you're doing. So question that everyone asks is, can I learn to trade with a small account? The answer is, you should learn to trade with a small account. And you should learn to trade on a market that enables you to trade with a small size. When I started trading, I started trading as an equity trader, trading New York Stock Exchange. I traded a specialist system. And we couldn't trade small size. Nowadays, it's much easier. You could trade, if you're trading on the Forex market, for example, you could trade with a micro lot, which is $1,000 worth of whatever currency you're trading. In the equity market, I think you can even trade with one share now. That wasn't, the minimum lot size when I first started trading was 100 shares. You couldn't trade less than that. So it's $1%, yeah. But say you're trading the Forex market and you're trading with a micro lot, you could trade at 10 cents, 10 pennies per pip, per point, yeah, per tick. So it makes no sense to start trading with a large account when you don't know what you're doing. You want to start with a small account and prove yourself and then scale up afterwards. So the question is, how much money do I need to begin? Well, it depends what market you're trading, but I would recommend as a good market to trade, the foreign exchange market, the Forex market is a good market to trade because you can trade in micro lots. That means you can even start with a $1,000 account, and that's what you need to start trading. Now, the good thing about that is you're not going to be focusing on making a living out of trading with a $1,000 account, because your risk size, if you're risking 1% per trade, for example, will be $10. So, say you make a 3-hour trade, 3 times your risk, you make $30. You're not going to be able to live off $30 a day. Yeah, most people, maybe in certain parts of the world, but if you're in the States or most Western countries, that's not enough to live on, especially not to bring up a family. So that gets you to focus more on the process, on trading. And if you develop good skills when you're not focused on the money, then that's exactly what you need to do. So when you are trading bigger size, you've already trained yourself to focus on the process and not the outcome, to focus on the process and not the money. You're not looking at the money. You're becoming the best trader you can be. The money will take care of itself if you focus on the right things. If you focus on the money, and most traders, especially successful traders, will go back and tell you that focusing on money has a strange effect on your P&L. You generally lose money if you focus on money. It happens, I've spoken to many traders, it happens to all of us. If you're focused on money, you're not focusing on the right thing. Imagine you're a surgeon, and the surgeon's focused on money as opposed to doing the surgery. You're focused on the wrong thing. You're not going to get the results. You may make mistakes. So as a trader, we're all dealing with money all the time, but you mustn't focus on that when you're trading. People always ask, again, what about a demo account? Yeah, demo account's okay to learn whether you're, to learn how to actually trade on the platform without making mistakes by hitting the buy button instead of the sell button, and get familiar with the platform you're trading. But a demo account, when there's no money at risk, is not going to develop you in the same way as trading with real money, albeit even a small account. Even though I've had some of my clients who are trading on the simulator, which is not real money, but they report back to me that they still feel, when they have a losing trade, it still gets them. So we have a need as human beings. We need to be right. Yeah, we like to be right. So if we redefine and reframe what right means trading with a trading strategy that has a positive expectancy. That means you're trading right if you follow that. So you don't have to be right on every trade, but you have to take the trades and be right overall over a large number of trades. If we redefine what right is that way, then that will affect our emotional system in a positive way. So very important to focus on the process and not the money. You want to start out trading with a small account, prove it works, and then start scaling up. So what account size do you need? So first, what you need to do is, again, it's backwards to the way most people think. Most people ask the question before they've started trading. Again, you can't answer it until you know what your results are. So what you need to do, and I'm going to show you an example, what you need to do is look at your results. Once you're consistently profitable, look at your results. And again, there's no point asking the question, what account size do I need to start making a living out of trading if you're not yet consistently profitable? You're not there yet. Get there first, and then once you've got the results, look at your results ask yourself how many R's. That means how many units of risk. If I'm risking $100 per trade, then my R value is $100. We're looking at your results, your profit compared to how much you're risking. That levels the playing field. Yeah, you can have a trader with $1 million account who makes $1,000 in the month, and you can have a trader with a $10,000 account who makes $1,000 a month. They both make $1,000. Who's a better trader? If they can do it consistently, and again, we have to look at drawdowns and everything else like that. But if both traders make $1,000 a month, the one with the $10,000 account is a much better trader. They're making more R's if they're risking 1%, for example, per trade. So once you know how many R's you're making per month, you need to ask yourself a question: how much money do you want to make per month? So now you know, once you've got those two numbers, what account size you need. So let's go through an example, okay? Everyone following? Just type a 1 in the room if you're following so far. So we're going to go through an example, and it'll be very, very clear afterwards, and you'll know what you should be doing with your own trading. So here's an example. Say you start with a $1,000 account. Like we said, it's a very good idea when you're trading the Forex market. Again, if you're trading the equity market, you can't start with a $1,000 account in most places. And if you're trading futures, probably not either. So pick a market that you can actually learn on, and then move over to the market once once you're familiar with trading, and then trade and see if that works on so different markets require different account sizes, minimum account sizes. Yeah. So say we're trading on the Forex market and we start with a $1,000 account. So we risk 1% of our starting balance per trade. So let's call that's $10. Yeah. So our value is $10. So if we look at our results, we're consistently making $100 per month. Again, not enough money to live on, of course, $100 per month. But say you're doing that. You're at that stage in your trading, you're making $100 a month. That's great. That's 10 hours a month. But what you want to do is make $1,000 a month. You want to supplement your income and trade 1 hour a day, for example. So if you want to make $1,000 a month, then what is your R value? If you're making, so you're making 10 times per month, and you want to make $1,000, you do 1,000 divided by 10, which will give you $100. So your R value is $100. And if we make sure that R value is most often going to be 1% of your overall account size, now you know what your account size is. You need an account size of $10,000 in order to risk $100 per trade, in order to make 10 times that per month, which would make you $1,000 a month. You see, you need to look at your results first and then go backwards to figure out what account size you need in order to make the type of money that you want to make every month. Does that make sense to everyone? Just type a number 2 in the room if that makes sense. Again, it's very important that you understand this. Most brokers will have you go the other way. Open an account with as much money as you can, trade as often as you can, and lose as much money as quickly as possible so that they benefit from it. You want to go through this step by step, okay? Now, today we've discussed how to define your goals, and the questions that, thank you, Dennis, John, David, Alton. What you want to do is, this is what we discussed. You want to define your goals first. That gives you the why of what you're doing, your reason for doing what you're doing. We've talked about how to uncover your edge. Again, you need to have an edge, and you need to find out what that is. You need to know what that is. We've talked about the trading framework, trading log, trading plan first, trading log, and trading journal, and the correct trading process, a step-by-step process that you need to go through. So now that you've seen the framework and the process you must have in place to stand a chance of success as a trader, maybe you want to take it a step further and learn, as I said I was going to share with you, learn how to read the trend using pivot analysis. Again, there's many ways to read the trend. This is the one where you keep your finger on the pulse of the market. You don't need anything else but the candlesticks. And this by itself would be an edge, understanding the trend, when it begins, when it ends, and again on multiple time frames. So what are the benefits of knowing how to read the trend? Again, everyone says, trade in the direction of the trend. And again, the whole saying is the trend is your friend, and people miss the end off, even though I've started to notice now other educators saying until the bend in the end. But for many years, you never heard that. You just heard the trend is your friend, and you're like, okay, so tell me what the trend is of the market. What trend are we in? And they'll kind of tell you, oh, when, it's not clear. Someone may say it's an uptrend, someone may say it's a downtrend. And again, you need a consistent approach to reading the trend. You need to know when the trend begins and when the trend ends. And imagine if you know where supply and demand is in the market as well, put it all together. The uptrend ended in an area of supply in the market. You know how to recognize that end of the trend. Wouldn't that be a good place to kind of take a trend on the short side, for example, or when the downtrend ends in the demand area in the context of a bigger time frame uptrend? So if you know how to recognize that, you've got an edge. If you do it with moving averages, you're going to be later to the trade. Yeah, you're going to get in late. Moving averages are lagging indicators. Reading the trend is a leading indicator. You've got a finger on the pulse of the market as it's happening. You get in before everyone else sees what's happening. And good idea is to make sure you're never fighting the trend. You may want to buy, as I said before, but it's in a downtrend, so you're not going to buy. But when the trend breaks, you're not yet in an uptrend, but you're no longer in a downtrend. So you've got an extra edge there. You're in the right location. You may be in the context, as I said before, of a bigger time frame uptrend. Let's stack everything up in our favor. We've got an edge. Make sure you're on the right side of the market. How many times have you gone into a trade and it just immediately goes against you because you're not on the right side of the market? Make sure you're trading on the right side of the market most of the time. And once you know this, you'll be able to develop a profitable trading strategy. Because if you trade in the direction of the trend or not against the trend, then that's an edge in and of itself. Go with the waves, not against the waves. And you'll be able to enhance an existing trading strategy that you have. Maybe this is the missing piece that you need in order to make what you're doing profitable. So what I'm going to do is offer you to join my How to Read the Trend training session. Again, this is the first part of the training called How to Read the Market Professionally, which will take you through also supply and demand and price direction analysis. And all of these training go through multiple time frame analysis as well, which is kind of what I call the third dimension. So 2-dimension, if you're looking at one time frame, you take it to the third dimension, looking at a higher or lower time frame, usually a higher time frame. So this is what you're going to learn. You'll learn how to identify the current trend of the market, to analyze the trend in multiple time frames. So it's not just one-dimensional, it's 2 or 3-dimensional. Yeah, we're looking at multiple time frames here. You'll know exactly when a trend begins and exactly when a trend ends. Exactly. There's no, it's not like subjective, it's objective. It's everyone who learns this will know exactly when the trend begins and when the trend ends. It's not like you ask 10 people and you get 10 different answers. Oh, this is an uptrend. No, it's a downtrend. No, it's a sideways trend. It's broken. You want to be exact when you're trading. You need to be exact. You need to be able to have something that you can do now and it's repeatable. And you'll learn how this knowledge will dramatically affect your bottom line. I've had traders that have completely turned their trading around by understanding this. And let me share that with you right now. So this is what people are saying about this. And here's a prime example, Jane from Austria. I don't know how to begin to say thank you to Simon for having made such a big change in my life. In short, I had been trading binary options successfully when it was banned last December, so wanted to learn to trade properly. I contacted Simon after watching his Where is the Dollar Going Next videos. Again, you can go to my YouTube channel. Let me put it into the room and you can subscribe to that. Put it out every week. I've been doing it for a couple of years now and it's super accurate. So let me just type this into the room and see if I can do that. So you can click on there and you can join my YouTube channel and get those videos as well. I must add that they were so accurate, I just knew that finally I'd found someone who really knew what he was talking about. We chatted on Skype a few times and I decided to join the trading room for a trial. Due to having a full-time job, I couldn't really join the week during the week, but a few times I did. It was incredible. I just watched what Simon did, how he used the levels to place his trades. This was something completely new to me after having only traded binary previously. I was amazed at what I saw. Simon contacted me again after the trial was over, and after another few Skype calls, I did his pivot analysis training, which is how to read the trend. All I can say to anyone who wants to consistently profit it, just do it. That training turned my whole trading around. From that day on, my trading has been so consistent, it is really mind-blowing. Once you understand the levels and can read the trend, you will beat the market every single day. However, the key is follow the pivot analysis, use the demand and supply levels, and adapt it to your own trading style. Be very disciplined. Don't be greedy. Stop when you have made your daily profit, and you will turn losing trades into winning consistently day in and day out. Simon's training can be adapted to any market. I mainly trade NASDAQ and futures and oil futures, NQ and CL. I use my own strategy based on Simon's education. I found the best thing was knowing what you are doing gives you confidence in your trades, and the fear of losing was gone. Trading had become a lifestyle, no longer a binary gamble or a nervous hope job. Believe me, it is the best and the only trading to succeed with. Simon, Mike, thank you so much. Mike, I run the trading room with it. Marcus, Simon is probably one of the best coaches out there with a heartfelt passion for coaching and a real understanding of how the market works. He helps you view everything in a new way. The way he teaches is also really good, and he goes through it until you understand. I can honestly say that I've gotten more out of this training than I expected. Thanks a lot, Simon. So let me share with you what you get in this training. You get over 1.5 hours of training. Value is $397. It's on demand. You can watch it as many times as you want. You can get personal access to me where you can email any follow-up questions you have after the session is concluded. And here's what I have, an offer for you. The regular price is $397. Deadline, I'm going to give you some time. Again, no rushing into anything. I only want people that are serious about it, so think about it. Thursday, February the 14th, so you've got till next week. At midnight Eastern time, you get $200 off. So let me put the offer in the room and you can go. But hear me out. There's something else I'm going to add to this, which makes it even more exciting. So click on the link. I've just put it in the room for everyone. There's a special bonus as well. And here's a link as well if you want to go to this. The special bonus is you're going to get 1 month free in the live trading room. Again, we have our weekly preparation session on Sunday where we set up all our levels and everything ahead of time. So that's preparation, which equals confidence. You want to trade with confidence. And we trade live every day, Monday to Thursday, starting at 7:30 a.m. Eastern time. So most people in the US can maybe trade before they go to work. So usually for about an hour. So 7:30, we usually trade the US market open on the Forex market, but we also look at futures and we look at stocks if anyone wants to look at any stocks before the stock market opens. That's US stocks primarily. So 1 month free in the live trading room. And this is what you get. So if you join now, you get how to read the trend, which is $397, plus 1 month in the live trading room, $497, which is a total of $894. And today you'll only pay $197. So let me show you. You basically, all you need to do is you go to this page over here and click buy now. And what it will do is it will give you the opportunity to have 1 month free in the trading room. If you don't want to continue after the month, again, it's a monthly subscription. The first month's free. All you need to do is set yourself a reminder for the end of the month and just cancel it and you'll never be billed again. Okay, but what you're going to do is get the whole training for, if you click on here, it will take you to a page where you get the whole training for $197 plus 1 month in the trading room. So what I'll do now is open up for any questions that you may have. And again, go click the link and I'm going to look for any questions over here. So feel free to type them in the question area right now. Okay, Borge, I hope I'm pronouncing your name correctly. Does the preparation time include any instrument we want? If you, and we've had people in the room now that are asking about the personal stocks that they're trading, so we can look at them. So we looked at last week. So yes, pretty much any US stocks that are listed, any New York Stock Exchange, NASDAQ stocks, any Forex pairs, we can look at anything. If you're trading it, we can look at it. But the instruments that we primarily focus on the main Forex pairs, the majors, and we focus on oil, on the futures, the E-minis, oil, gold. Yeah, we can look at the 6E, which is Euro futures. Yep. Okay, trading room hours. So on Sunday, we have a preparation set. Each of the trading room sessions are recorded as well. So if you can't make it live, you can watch the recording. And again, you can learn from that. So we run on Sunday at the moment. We start our session at 3:30 a.m. Eastern time. And believe it, we've got people from literally all over the world, from Australia, from the States, and people making it. And it's amazing. And from Europe, yeah. And during the week, we start at around 7:30 a.m. Eastern time till around 8:30, give or take. It's about an hour or so. Again, we don't want to be doing it all day long. To be successful as a trader, you don't need to trade all day long. Most successful traders trade around an hour a day, 2 hours a day, maybe. Marge is asking, how much is it after the month? At the moment, it's $497 a month, but you can cancel it and pick up another subscription depending on how you do it. You can lock in for a whole year as well. You can go, again, you can go to my website and click on, let me just show you. Now, feel free to go to the websites over here. And again, if you want to learn about building a profitable trading strategy, you can put your details in here and get access to that video. So we've got the live trading room. You can click on here. And generally, with a click start trial, afterwards you can see if you do it on a monthly basis what it is. If you lock in for a whole year, you get about 50% off, and you can do it quarterly as well. And again, if you have any other way you want to do it, feel free to contact me. You can email me at simon@tradesmartforex.com. And let's have a look at any more questions. Can you post the link in the chat? Sure. Let me just do that. The trading room, let's do that. Again, you can go to the website and everything, all the part of the training and everything is on the left-hand side of education and training, or you can get it from here as well. You can get training and you can go through and see the different types of training that there are. So just go, I'll post that in as well. Just go to the website. Let's have a look. Any more questions? How to trade a volatile FX market. Volatility is a trader's best friend. I can give you an example actually. Let me see if I can give you an example. And this is the beauty of it. Let me show you on the pound. That's an absolutely beautiful trade. This is volatility. See this? We've got a few more minutes left, I think. So look at this trade. Here's a trade where the pound was dropping and it dropped straight into our demand zone here. Yeah. And our demand zone over here on the daily chart, daily demand and hourly demand. We'll make this bigger. You see, into this level over here. Dropped strongly into this level. Yeah. And look at the market. It ran up. This is volatility. Yeah. And it ran up. Nice big move. And again, you could see that you could take this move on a smaller time frame as it broke the trend. Yeah. Again, you can, if you know how to read the trend, you get your first high or low over here and you can enter. You could actually enter as it hit the area as well. It's a very high probability trade. High probability trade, and you could get quickly in and out of that one. quickly in as it hit the area and take over 100 pips on it. Do I trade on Friday? I usually trade the London Open on Friday, which is 3:30 a.m. But we don't have a trading room on Friday because we trade the US, and it's yeah. But I do trade on Friday. Do we give buy and sell recommendations in the room? Yes, we do. There's two different types of trades that we would post in the room. There's trades that we're in already, maybe, and different types of trades. Myself and Mike are maybe in sometimes longer term positions, sometimes swing trades, and sometimes day trades that we're in before the session, and we'll talk about them. And we also take trades during the session if there's anything setting up. And there's two different types of those trades. One of the trades is the trades that we call that anyone can take, for example, that we will post as a trading room trade, which will have an entry, stop, and target. And then all you need to do is position size and take the trade. We'll call out the trade before we're taking it. We'll tell you exactly what we're doing, where we're getting in, where the stop and target is, and then we'll take it live in the trading room. And you can follow along if you wish. And the reason why we do it like that is because that's the type of trade that you don't need to do anything. Once you're in the trade, that's how we're managing the trade as well. We're just leaving it alone with entry, stop, and target. But other trades that we may have a bit more sophisticated trade management, we'll show you that we're doing them, but we won't post them as an official trade because we may be doing things that you're not going to see, and you won't get the same results as we do if you take those trades. So we'll say we're doing a trade and it's not a trading room trade. And again, you can do as you wish with it, follow your own trading plan. But the other trades, if you take them and, were profitable last year, every one of those trades, I mean, not everyone was profitable. Not every trade was profitable, but we had a profitable year last year. And James, that's a good question. Do you train in supply and demand? Yes. In the trading room, we go through supply and demand. And again, you'll pick it up by osmosis just by being in the trading room. And again, we have training as well that you can take it. Which timeframes do I enter on? If I'm day trading, I enter on a 15-minute or a 5-minute chart. Swing trading, I enter on the hourly chart, and I'm generally trading the daily and sometimes on the weeklies.